95% loan-to-value mortgages are finally back. From April 2021, first-time buyers and home movers will be able to buy with just a 5% deposit. And in this video, I'm going to be running you through some of the key details. Hi, this is Sam from Rosehill Financial Services. If this is your first time watching us, do consider subscribing to the channel because we'll be bringing you new content each week to help you in your buying journey. So we've had good news in the March 2021 budget because the government will be introducing the Mortgage Guarantee Scheme. So from April 2021, large lenders such as HSBC, Barclays, Santander, Lloyds Bank and NatWest will be returning to the 95% loan-to-value range. More lenders will be added to this list as time goes on as well. So how does it work? Well, it's not like the current Help to Buy scheme that's in place, so the equity loan, because you won't be taking a loan from the government to help you with your purchase. In this mortgage guarantee scheme, it's essentially the lenders will be benefiting from a government guarantee based on these higher loan-to-value products. Simply put, the government will compensate the lenders for a portion of any net losses in the event of a repossession. And this guarantee will be valid for 7 years from the date that the mortgage transaction is complete. Now, the great news with this mortgage guarantee scheme is that it won't be limited to just first-time buyers. So home movers can take advantage of this as well. And to add to this, it won't just be valid on new build properties. So you can buy older properties with this scheme as well. Now at this point in time, we don't know the interest rates that will be available at this 95% loan to value range, but I'd hope that with all of these lenders entering this 95% loan to value market at once, that hopefully they'd be quite competitive with their rates. Now I'd also hope to see, as a knock-on effect from this, that the 90% loan to value range would also become more competitive because all of these new products are coming into play. We're just going to need to wait and see what actually happens over the next few months. So a couple of points in terms of your mortgage eligibility for these products. Now first of all, this is only available to residential purchases. So this won't be available to any buy-to-let purchases. There will also be a maximum purchase price of £600,000. As with any mortgage application, you'll also need to fit the affordability with the particular lender and you'll need to pass their credit scoring system. At the 95% loan-to-value level, I would expect that very light adverse, if any, would be accepted by lenders. But again, we're going to need to wait and see what happens. So the specific lending criteria hasn't been confirmed by lenders just yet, but I would stick to a rule of thumb of around 4.5 times your income as a good indication of borrowing power. So if you're looking at a 95% loan to value, you're obviously going to need to be earning enough to facilitate any shortfall between your deposit and the purchase price. So based on this 4.5 times your income, if you are looking at the maximum of £600,000, then as a household income for one or two applicants, you're going to need to be bringing in around £127,000. And if we're looking at mid-range of around 300 grand, then you're going to need total earnings of around £64,000. If you'd like to watch a video on how much you can actually borrow, I'll link that in the description as well, as we have made a separate video on this. Now to add to this, the mortgage must be arranged on a capital repayment basis rather than an interest-only basis to fit criteria with this particular scheme. So this scheme is set to start from April 2021 and is set to continue until December 2022. But this may be reviewed and extended, we'll just have to see what happens. So is there anything else to consider? So although it's great that you can get yourself onto the property ladder with a lower deposit, less of an initial outlay, the amount of equity that you have in the property is relatively low. So if there are decreases in property prices, then you can find yourself in negative equity. Now, if you haven't heard of the term negative equity or you're not too sure what it is, it basically means that you will be owing more on your mortgage than what your property is worth. So if you're buying a property with 5% deposit and property prices dipped, say 10-15%, you will find yourself in negative equity. So in some unfortunate circumstances, property prices can dip meaning that if you sell your property, you still owe some money to the mortgage lender. Now, hopefully this won't happen, and you will be paying down the debt month on month. So you will be creating more and more equity as the months go on. But it's just an important factor to bear in mind when you're entering a purchase with such a low deposit. So let's hear from you. Are you going to look to use this mortgage guarantee scheme? Do let me know in the comments. As always, if you'd like any further information at all, please don't hesitate to leave me a comment or message me personally and I'll be happy to help. Before I let you go, I must tell you that your home may be repossessed if you don't keep up repayments on your mortgage. Thanks again for watching, and I look forward to bringing you more useful content in the near future, and I'll see you in the next one.